What's up, you guys? Zoe here from OneGlanceTrader.com, and in this video I'll be sharing with you a full trading system that I'm calling the pin bar Confluence trading strategy. Now in this whole system we'll go through the trading setup, when to enter, how much to risk, stop loss, take profit targets, the whole package. I've left no stone unturned in this video, so let's get to it. So I've just put a few notes together which I'll include in the description to kind of walk you guys through all the different parts of this system. So the first one of this pin bar Confluence strategy, if you haven't worked out yet, the baseline entry is going to be from my OGT price action indicator using the pin bar candlestick pattern. And again, you can download this indicator absolutely free, links in the description, and I'll leave a playlist in the top right corner for you guys to go check out, so you guys can learn everything about the price action indicator. So I'm not going to go into any of the settings and stuff in this particular video. I've got other videos that again you guys can check out to go do that. But what we need is is that we're looking at the pin bar as the basis to go look at the chart. So as you guys know, my kind of trading approach is not spending a lot of time at the charts, using indicators and alerts to identify times in the market where we then need to go to the charts, have a look at the situation, and assess whether or not we're going to place a trade. So in this case, it is the pin bar. So I'm showing you at the moment a Euro Aussie dollar 15-minute chart just back in May, so just under a month ago, and we'll be looking at this pin bar over here. Now we've got other stuff on the chart and that will become relevant as we walk through the system, but for now in the indicator you can set an alert inside the settings to say I want to turn on the pin bar candlestick pattern, and there are 4 or 5 other candlestick patterns that the indicator comprises of, but in this case we're just looking at the pin bar. You set the alert on and you can either push that to your smartphone or get an alert through email or through sound of when a pin bar is formed. So you can see here in this situation that this pin bar has just formed, and it will tell us now a pin bar has been formed. What do you want to do effectively? So we don't know that any of this price action occurs at this point, but we're now going to assume we're at a point of where this pin bar has just formed. And again, I'm not going to go into the details of what this pin bar means and what this 74 means. Again, we can check out the other videos on that. So we've got a pin bar that's formed and we are now at our machine. So the next question is that we have to ask ourselves is, where does this pin bar form on the chart? And candlestick patterns are great, and any type of price action is great, but it's only better and more amplified as a trading system or a strategy whereabouts it occurs on the chart. And the more information we can kind of tell by adding on additional layers of technical indicators or even fundamental indicators, we then can get a full picture of the market in relation to that pin bar that's formed. So there are 4 things that I normally go through when I see a pin bar or when I see an entry setup form. The first one is it at a round number level? Now what this basically means is that price, is it at a round number psychological level, so at a 500 level or at a 100 level? And as you can see, I've got these levels outlined on my chart, and the indicator that I use is the round number level indicator. It's free on the MQL5 Marketplace. If you just go Google round numbers indicator, then you can download that. It's absolutely free, and just add it onto your chart there. So just so you guys can see, it's called the round numbers indicator. Put that into Google. It's the first link that comes up. So, and what I'm looking for is I'm looking for any part of that candle to be on a round number level, and as you can see, it is on a 500 psychological round number level, which is great. It's great. As you can see, price is trying to go up to this level, and this level potentially, because we don't know anything more at the moment, is that they could use this as a form of resistance. You can see that price action here is, halted at this level, came back down, tried to push up, the bulls tried to go in, and then the bears came in and closed that candle below that level. That's exactly what we want to see. It's not going to be perfect. Like, this is a really good example, but you'll kind of get the idea as kind of time goes on. If we take this pin bar over here, this wouldn't be considered at a round numbers level because it's too far away from price, and none of the whole high or low of the candle is touching the round numbers level. So for me, this wouldn't be valid, but this one over here would be valid. So we can say yes to this. The second thing is does it have divergence? And you guys will know I've got a playlist on divergence, which I'll put in the top right hand corner. I'm a big fan of regular and also hidden divergence. So in this example, because it's a bearish pin bar going in the kind of direction of this downward trend, we are looking for bearish hidden divergence. And what that means is where price is making higher highs, sorry, no, not higher highs, lower highs, and the MACD or your oscillator of choice is making higher highs. And for those of you who know, I love to use the MACD, and there's a reason for that, and that comes into the entry, because I like to use the MACD as an entry signal after divergence. So you can use the RSI, stochastic, CSI, any type of oscillator, but my preference is to use the MACD. So if we have a look at this, as I said before, is that the price needs to be making lower highs. But as you can see here, price is basically flat. So it's not making lower highs and it's not making higher highs. So it is basically flat. And the MACD is making higher highs. So the fact that it's not making price isn't making lower highs or higher highs, is basically flat, I still take that as a disagreement with price, because in theory the MACD should also be making the same high as this peak over here. And as you can see, is that this peak here is higher than this peak. So therefore I consider that as divergence. It's not the best looking divergence, if I'm honest, but it's considered as divergence. And also I do like it's at this round numbers level. So it's not the cleanest cut, but I'm going to say that it has got divergence. The next one here is whether the RSI is overbought or oversold on multiple time frames. And again, I'll put this inside the description for you to download in the top right corner for the tutorial video. I have another indicator called the RSI MTF indicator, which is the RSI multi-time frame indicator. And what this indicator does, it outlines whether the RSI is overbought or oversold on one or multiple time frames, and it's indicated by these arrows that you can see. So you can see over here, just before the pin bar formed, is that you got two down arrows, and basically what that means is that the RSI is above, in this case 70, so it is overbought on two time frames. That's how I've set it. I always do 70 and 30 as my overbought oversold, and time frames quantity is always one. And what that basically means, 0 is current time frame and 1 is one time frame above. So we're on the 15-minute chart. So on the 30-minute chart, the RSI is also above 70. So again, that gives us another inkling that price is at an exhaustion place high in relation to its average. Again, giving us another potential indication that price may reverse or at least retrace inside the short term. So we've got a bearish pin bar. We've had previous situations where the RSI is overbought on multiple time frames, and we've also got price at a psychological round number level. So that's three things here that is going our way. And then lastly, what I would always look at is have a look at the direction of the main trend on the chart. And the way I kind of do that is I want to kind of take into account the current time frame as well as the kind of time frame above. And the simplest way to do that is just by using a standard 200 period EMA. So if we add that on there, so I didn't add it on because it's just too much information on the chart. So 200, you can use moving a simple or exponential. I like to use the exponential. And as you can see here, it's just about, and this is even better. Price is at exactly at the EMA line, which is acting as another form of resistance. But price is also below the 200 EMA. This looks really good. This I couldn't have actually picked a best example for you guys to walk you through this. This is another strong confirmation that price is trying to break through the 200 EMA and also this kind of psychological round number level. And also price is exhausted trying to be, with the RSI being overbought on multiple time frames. So, you know, for me, this is a great example of this kind of system. So in this example, that is yes. And what I'm just going to do is just delete the EMA, just so you guys can see this in a bit more detail. And what I'll do is also kind of zoom in as well, so you guys can see what's going on here. So as you can see, that we had our base strategy, our base entry kind of set up. The reason to come to the chart is a pin bar is formed, and what we've done, and again, it will take time, it will take practice, but you know, you'll start, if you look at this, every time a pin bar is formed and just go, is it a round number? Yes or no? Is it divergent? Yes or no? Is it overbought and oversold multiple time frames? Yes or no? Is it above or below the 200 EMA? And again, a lot of it, bar divergence, a lot of this stuff, the indicator does all the work, and you just got to see whether it's yes or no or above or below. Divergence takes a bit more longer to get your head around, but once you got your head around it, it is quite straightforward. And once you've got all of this, again, I've broken this down very simplistically, is how much do we risk on the trade? Now, it's very important just to understand that if it was just a pin bar on its own and all of these four things were no, depending on your type of trader that you are and whether you want to be very active and just trade every pin bar that you see, my suggestion is that you risk a very small amount of your trading account. Personally, for me, if I didn't get any of these four factors, I wouldn't take this trade. But I think depending on what type of trader you are, if you want to be actively involved in the market, then I would only risk 0.5% of your trading capital if none of these additional four factors came in. Then, as you can see, the more of these factors that we get, the higher risk that we put in. Now, the question I normally get asked is divergence better than the round number, or or if there's an RSI but no main trend, is one better than the other? And to keep it simple, my view is no, there isn't. If you've got any one of these two, so if you had a round number and direction of main trend, I would trade with 1.5%. Or if I had a round number and divergence, I'll still trade with 1.5%. In my view, one is not better than the other. If you're a beginner and you want to just take the complexity out of it, just if two of those things occur with the pin bar, 1.5%. It's as simple as that. So hopefully that makes sense in terms of the risk. And this is the game changer in my view, is you should be looking to take the trades. Don't be scared of not taking the trade, but just adjust your risk to compensate the probability of a likely outcome. Then the next thing that most traders ask is, when do I actually enter? You know, it's great you've taught me this amazing trading strategy, but when do I actually pull the trigger and enter? Now, to keep this relatively simple, there are two ways. And the first way is the break of the high and the low. So in this case, is as soon as like I said, there's kind of three ways you can do this. The first way is either as soon as it breaks, you enter, or you break on the close of the next candle, of the candle that breaks through the pin bar. So if you want to keep it relatively simple, you wait for a bar to close underneath the low of the pin bar candle. So in this case, it would be over here. So this line here would be your entry of when to enter. That's one way to enter. The second way to enter is if you do have divergence, would be the cross of the MACD, is what I said earlier. So the cross of the MACD is actually the pin bar itself. So you could enter straight away after the pin bar is formed. You get the alert, you go to your chart, you do your analysis, you can enter that trade straight away, and the level of risk will depend on your further analysis. So you don't have to wait for this bar to close. So therefore you can get, in this example, a better sniper entry and get into the market straight away, because the crossover to confirm the divergence happened on this pin bar candle. And again, if you've got any questions on that, leave me a comment below or drop me an email. I will walk you through it. So we've got that example there of when to enter. But if you don't have MACD divergence, you just go on the break of the pin bar, or a candle closing below the low or the high. Next question then is, where do we put the stop loss? So we put the stop loss above a couple of pips above the high of the pin bar candle. Now, if we had, for example, let's just say the psychological level was just above this 74, what I would do is I would actually move my stop loss just above that psychological number level. And the reason why I do that is because that, as you can see in various situations here where my cursor is at the moment, these levels act as natural support and resistance. So what you want to do is you want to kind of be above it or below it, depending if you're long or short, to give you that extra layer of protection. So that's where you would put your stop loss, and then you'll take profit. So I normally, again, this is my personal trading style because I don't like to be in trades for a very long time, is go for a 1-to-1 or for the previous high or low, depending on which is greater. So in this example, so let's just say my stop loss was here, and then my entry, let's just say we got in at the close of that candle, which is there. So my risk in pips is 33 pips, and so therefore I would look to see where 33 is. So 33 pips is around there. So if I put a rough thing, it was about there-ish. So there's my 1-to-1, yeah, and the low. So the last previous low is here. So I would either be looking, and it would depend on how many of the factors were in my favor. If I only had 1 or 2 factors in my favor, then I probably would do the 1-to-1. But in this example, I've got all 4 factors inside my favor. I would be looking at the previous. I'll be looking at the previous low. So in this example of my entry, 60, it's pretty much a 2-to-1 trade, and to be fair, I probably would have done it around here, or maybe even this next psychological level would have been there, because you know I like to get out of the trade relatively quickly, and I think my natural state would have been, if it gets to this level, I'm definitely looking to take it off or take half off, move my stop to break even, and then just let it go potentially to the next level. So that for me is how I would manage the trade in terms of take profit targets, stop loss above the high, and then my take profit will be a 1-to-1 or the next psychological level or the next low. So again, that will depend on you, but the minimum is 1-to-1. Yeah, never risk anything less than 1-to-1. And yeah, and that's pretty much it, really. It's pretty much, you know, like I said, the key thing is having that baseline entry system, and it doesn't have to be the system. It could be the engulfing bar or the Marubozu, or just using the RSI MTF as your kind of alert strategy, and then looking at divergence, round numbers, price action, Fibonacci levels, Bollinger Bands, whatever your trading strategy is. We can layer on those additional technical indicators as well as potential news events or whatever fundamental analysis you've kind of layered in. For those of you who follow my channel, I don't really look at the news from that perspective. I kind of let the technical tell me the story, and then and that affects how I do my trading decisions. So the key thing for me in all of this is this risk element and your analysis. This shouldn't take more than 5 to 10 minutes to do, and therefore you can set your risk appropriately. So I really hope you've enjoyed this kind of trading strategy or this trading approach using Confluence. Please like this video, subscribe, comment down below if you've got any questions, and if you'd like to see more videos like this. And what I'll do now is put up the Confluence playlist that I've got that goes more into these kind of details, and I shall see you guys in a second.